We'll start. Awesome. Automated processes are great.
Hi all, welcome to Strengthening the IRS to create a more equitable tax code. We're going to get started in just another minute or two. We're going to give folks a chance to come in. So please just hold and we'll be with you shortly. Hi all, this is Joanna Ain from Prosperity Now. I'm an Associate Director of Policy here. And yes, you're in the right room. This is Strengthening the IRS to create a more equitable tax code. Very pleased to be with you, especially with our wonderful partners, National Women's Law Center, SaverLife, and United Way. So we're gonna get started in a second, but first I'll go through a few housekeeping details. First of all, this webinar is being recorded. We will be sending that out within the week. All webinar attendees are muted to ensure sound quality. You can go ahead and ask questions in the Q&A box, or you can share your thoughts anytime by typing into the chat box. And then if you experience any technical issues, you can email zoomwebinar@prosperitynow.org. And without further ado, I'm going to turn it over to my colleague, Rebecca Thompson. She's Prosperity Now's Vice President of Strategic Partnerships and Network Building. Thanks, Rebecca.
Thanks, Joanna. Good afternoon, everyone, and welcome to today's webinar on strengthening the IRS to create a more equitable tax code. We are so delighted to have you join us today for today's discussion, and we hope that you will find the information shared here to be valuable, meaningful, and actionable. I want to extend and reiterate and extend heartfelt thanks to our speakers for sharing the benefit of your experience, expertise, and insights, and to our valued partners and co-hosts, National Women's Law Center, SaverLife, and United Way for joining us in this effort to bring this webinar to you today. At Prosperity Now, we are working daily to transform current systems, practices, and policies in service of an economy that works for everyone. Our mission is to build an economy that is just, fair, and free from structural racism, where every person, family, and community has the power to build sustainable wealth and prosperity. We know that taxes are a critical part of our economy, touching millions of lives. Over the last couple of years, we have witnessed the impact the tax system has had on every American household and adult, as the IRS has dispersed billions of dollars in economic impact and advanced child tax credit payments. The administration of benefits legislated through the CARES Act begs the question whether or not the IRS's role is limited to tax administration, or can, and should the IRS's role be expanded to include benefits administration. One thing is clear. Over the last couple of years, the IRS has broadened and contorted its internal operations to prioritize the administration of benefit payments to millions of American households. While the IRS has done a great job in reaching millions of non-filers and getting these critical payments to both regular tax filers and those who aren't, still there are challenges with reaching underserved communities, particularly regarding enforcement actions and customer service levels that disproportionately disfavor low-income EITC-eligible households of color. A tax system that works well for the wealthy and penalizes the poor does not lend itself to a just and fair economy. Which brings us to today's discussion. Years of congressional budget cuts to the agency has resulted in an underfunded IRS, which consequently limits the resources available to provide adequate customer service support and forces the IRS to prioritize what could be considered as easy correspondence audits of low-income filers who are disproportionately people of color over audits of higher income filers. Today's speakers will share how strengthening the IRS is essential to a more equitable administration of the tax code. Our first speaker, Lily Batchelder, serves as Assistant Secretary for Tax Policy at the U.S. Treasury, spearheading all tax reform efforts, foreign and domestic, including the establishment of the global minimum corporate tax in 2021. While working in the Biden-Harris administration, Batchelder is on leave from NYU's School of Law and Wagner School of Public Service. From 2014 to 2015, Batchelder served as the Deputy Director of the White House National Economic Council and Deputy Assistant to the President under President Obama, once again leading tax and budget issues, including tax reform, retirement policy, and low-income benefits. Previously, she served as the Majority Chief Tax Counsel for the U.S. Senate Committee on Finance. Her principal areas of research are federal income taxes, wealth transfer taxes, social insurance, and the effects of fiscal policy on economic insecurity, income disparities, and intergenerational mobility. Prior to joining NYU in 2005, she was an associate at Skadden in Washington, D.C., and received a bachelor's degree in political science from Stanford University, an MPP in microeconomics and human services from the Harvard Kennedy School, and a JD from Yale. Welcome, Lily.
Thank you so much, Rebecca, for that very kind introduction and for inviting me to speak today and for this remarkable gathering. It is so fun looking at the chat and seeing all of the people across the country doing such incredible work on issues that we really care about. I've long admired Prosperities Now's work and that of all your partners, and so it's a real honor to be here today. And I'm particularly excited because this discussion could not be more timely. I want to thank everybody for joining and for the opportunity to explain why the Biden administration is so committed to the issues that Rebecca just outlined as part of our work to create an economy that's fairer. So I will say the Biden administration's proposed reforms in this space are guided by a singular objective, which is to bring about an end to a two-tiered tax system where ordinary Americans comply with their tax obligations, sometimes leave benefits on the table to which they're eligible, and many high-end taxpayers do not comply with their obligations. And the reforms that we've put forth will certainly help the government recover revenue to help fund improved social programs, many of which are now administered by the IRS. But perhaps even more importantly, they will help create a more equitable and efficient tax system. Over the last decade, the IRS budget fell by about 20%, exacerbating inequities in the tax system in ways that were entirely predictable. Strapped for resources, they experienced a sustained decline in their workforce. It's now the same size as it was when I was born, and that decline was especially large among its more specialized auditors. And then on top of that, there are rules and regulations governing tax procedures that can tend to advantage well-resourced and corporate taxpayers who have access to tax experts in ways that many low and middle income taxpayers do not. So fundamentally, the tax gap and unpaid taxes come at the cost to American households and taxpayers who are compliant, because policymakers then have to choose between rising deficits, lowering spending, or further tax increases to make up for the lost revenue. And these compliance initiatives not only have the potential to raise substantial revenue, but also to improve tax progressivity and efficiency. I'm sure many of you are aware that about 99% of taxes due on wages are paid to the IRS, but compliance with less visible sources of income is estimated at just 45%. So this means that our system disproportionately benefits high earners who often earn income in opaque ways that are not subject to information reporting, while over the vast majority of Americans who earn a wage from their employer and have to have their taxes automatically deducted from their paycheck. Indeed, although the tax code redistributes income in ways that aim to mitigate inequality, the system itself can function in ways that exacerbate it. And historically, tax research on equity issues has been limited by the absence of data or estimates of a taxpayer's race or ethnicity. But last year, the Biden administration launched an Equitable data working group that is seeking to address some of these limitations. And importantly, this effort will help us examine the relationship between the tax code and racial inequities. It is a multi-year project. My team is very deeply engaged in this, and it's going to require close engagement across federal agencies and also a lot of engagement and learning from advocacy groups, including all of those of you here today. Ultimately, tax reform is about more than simply raising revenue or improving our fiscal position. It's really about creating a tax system that's both efficient and equitable. And so last year, the Treasury Department published the American Families Plan Tax Compliance Agenda, which outlined our proposals to invest in the IRS for a once-in-a-generation overhaul of tax administration. And my Treasury colleagues estimate that these investments would raise $700 billion in additional tax revenue over the next decade and $1.6 trillion over the following decade. They can also ensure that people can more effectively and easily take up the valuable benefits for which they are eligible. As many of you are aware, the IRS IT system is very outdated, dating back parts of it to the 1960s and programmed in code that there are very few people remaining in the US that even know how to program in it. So the Biden administration has at every turn been working with Congress to try to provide the IRS with the stable and long-term funding that it desperately needs. And Congress is right now considering this pivotal investment. So whenever you hear or read about stuff on reconciliation discussions, that is about this investment that would both reduce costs to families and reduce the deficit. So I wasn't exaggerating when I said this conversation could not come at a better time. I really couldn't be happier to be here. And thank you again to the Prosperity Now team for bringing us all together. And thank you to all of you for your commitment and all of your work trying to make the tax system fairer. So now I'm going to turn it over to my Treasury colleague, Natasha Sarin.
Thanks, Lily, and thanks to all of you for being here today. And I would like to echo my thanks to Prosperity Now and the team for working so hard with us to put this event together. I think my name is Natasha Sarin. I am a counselor at Treasury focused on tax policy and implementation. And before I joined Treasury, I came at these sets of issues through an academic lens where I had the opportunity to write extensively about the importance of investing in the IRS, both from a revenue perspective, but also, as Lily is speaking to, from an equity perspective. And really, I think that's the nature of the discussion that I'm hoping that we're all going to be able to have today. What I think I'd like to do and where I'd like to start perhaps is to ask each of our panelists, and thanks to all of them for joining us this afternoon, to just spend a moment kind of introducing themselves and giving us a bit of a perspective on what brings them to this set of issues, what they're working on in their lives today, and kind of how they think about tax administration and the future of tax administration going forward. And maybe I'll start, and maybe we can I'll just start and ask each of our panelists to pass it around, and maybe start with Erin and then go to Stephen and then Lee and then Mike. So Erin, maybe you can spend just a minute giving us a bit of background.
All right, so thank you to all for inviting us here today. Natasha, just to be clear, just high level, or you want us to actually get into the meat of it?
Just high level, and then we'll get into it in just a second.
Great. So my title, actually, I'm the National Taxpayer Advocate, which is a position created by Congress over 20 years ago as part of the reform of the IRS back in 1999. And I lead an agency that's called the Taxpayer Advocate Service. So by statute, we focus on improving taxpayer service, and we're trying to protect taxpayer rights. And we're an independent agency within the IRS that are functioning or focusing on making life better for taxpayers. So similar to many of you on the outside, we have sort of a role inside the IRS to focus and try and improve things. And then we also work one-on-one with taxpayers when they have challenges with the IRS to resolve those issues. So we advocate on their behalf.
Great, thanks, Erin. Stephen?
Hi, thanks for having me. I'm so excited to join everybody here to talk about this incredibly important topic. My name is Stephen Dean. I'm a professor at Brooklyn Law School. And what brings me here today is just one single thing. And it really is the question that I think is most important in the sense that it's most under thought and under addressed in this space. And it's the importance of race, not in the structure of the tax code. That's something that Dorothy Brown has written about. That's incredibly important. I'm just talking about in the way that, as happens in all areas of law, in all areas of law enforcement, through both actual and unconscious bias that the law may disfavor folks who can least afford that. And I'm super grateful for Treasury and the Equitable Data Working Group for the work it's doing. But I do think that we need to do more and be more aggressive. I'm not sure what the tax law equivalent of body cameras are, but we need some way of building trust that is not just theoretical, but actual, so that those who are likely to be most skeptical of a government agency that is not only in charge of enforcement, but also a critical source of benefits for those most in need, if there's a lack of trust, so much of what Lily and the rest of the team and Natasha are trying to do is going to be made much more difficult by the absence of that trust. So I'm just going to throw something in the chat that will give you a sense of what I'm talking about. Just take a look, download that, an article, Filing While Black, that really, I think, offers a different perspective on the issues that we're talking about today.
Thanks, Stephen. Lee?
Thank you. Thanks so much, everybody. And thank you to Prosperity Now for having me. It's great to be back with old friends. And I'd really like to thank the IRS and Treasury for your openness in having this conversation, which I think we can all agree is incredibly important. And I hope we can agree that we're all have the same core objectives at heart. So I'm here because the IRS provides critical economic support and wealth building opportunities to millions of American households. This is not just a tax collecting agency. It is an agency that is increasingly playing a pivotal role in the financial lives of working American families. I am the CEO of SaverLife, which is a nonprofit fintech company that now reaches over 500,000 members nationwide. We represent a growing online community of people, mostly working mothers earning low incomes who are seeking to improve their financial health. So our members join SaverLife from all over the country to find support, resources, advice, incentives, and rewards that help them jumpstart a savings habit and begin to build wealth. And of course, we run a major tax time savings campaign every single year that reaches tens of thousands of tax filers. We call it the Tax Time Challenge, and we do that with our partners at the Intuit Financial Freedom Foundation. I will say that for our members who are primarily parents of color, making incomes around $25,000 to $30,000 a year, that tax season is the single biggest wealth building moment of the year. It is the moment that we see our members receiving thousands of dollars in credits that they are owed and that they desperately need. And they use those funds to pay down bills, to pay off debts like medical debts, actually to go and seek medical care that perhaps they've been putting off while they've waited for these checks to arrive or these direct deposits. And also to make major purchases like buying a second-hand car or putting a deposit down on a new, better place to live. We also see significant contributions to savings accounts, which are used throughout the year as a buffer against income and expense volatility, but also as, once again, that critical wealth building opportunity. I know we're getting into a little bit of the conversation about what's happened over the last few years, but really I think that what brings us here today is to share the experiences of our SaverLife members to underscore how vital the service is that the IRS provides to these families, and also to maybe suggest that the IRS needs a bit of a rebrand as well as major investment to continue living up to the promise that it now plays in the lives of so many.
Thanks, Lee. Michael?
Hi, everyone. My name is Mike Schmidt. I'm at the Treasury Department, working on a set of tax policy and administration issues. In my previous job, I was commissioner of the state tax department in New York. And in that capacity, I will say that I saw firsthand how important the role that local invited practitioners and local organizations play in helping families access tax benefits in their communities. And so I wanted to say how grateful I am for all the work that all of you do on a day-to-day basis to advance these shared goals. And I come at this set of issues kind of where Rebecca started. To me, the discussion of about the IRS as a benefits administrator is not really a policy statement. It's just a reflection of policy as it's been enacted over recent decades. And I think that has become particularly clear over the last couple of years with administration of economic impact payments, with administration of the child tax credit payments. I mean, the child tax credit just shows how dramatic and powerful the IRS can be as a tool for social welfare in this country. Last year, $93 billion of payments went out to families across the country. 30% of those went to families making less than $30,000, 50% went to families making less than $50,000, 27 million families who wouldn't have gotten full tax credit because of limits on full refundability are now eligible for the full credit. So these are really powerful numbers. A Columbia study showed that almost 4 million kids were kept out of poverty in December of last year as a result of the child tax credit payments. But from my perspective, having worked on the issue from Treasury, it also shows the importance of investing in the IRS if we really want it to be a vehicle for social benefits going forward. Because it was a remarkable success, the IRS's ability to stand up the program. Within 4 months, payments were going out to the families of more than 60 million kids within 4 months after enactment. But there were real issues, and fundamentally, if you want to drive an old car really fast, you can do that for a while, but eventually the car is going to break, right? And I think we're at a place here where we really need to invest in this institution to rebuild the engine. I think we're at, as Lily said, we're at an inflection point in terms of legislative politics for potentially doing that. And so I'm very excited that we get to have this conversation with all of you to talk about it.
Maybe I think that's sort of a natural place maybe for us to sort of dig in and start a bit by trying to think about what the future of the IRS should look like and the nature of what these resource constraints that the agency is living with today have kind of caused. Because to Mike's point, I mean, we've seen the IRS do pretty remarkable things over the course of the pandemic. They've got $1.5 trillion of support out to families in the form of EIPs and the advanced child tax credit. But those resources to support those sorts of initiatives have required the agency to make really difficult choices with respect to what they're being able to do. And today you have tens of millions of families who are waiting for their tax returns to be processed and awaiting their refunds because the agency just doesn't have the infrastructure or the investment really in place to support the American people the way they deserve. And that's why, to Lily's point and kind of how she led up top, providing the IRS the resources to do this sort of multi-year sustained funding and investment to be able to rebuild its technology and bring it into the 21st century, to be able to invest in service so that they're able to pick up the phone when taxpayers call and make sure that people get the benefits to which they're entitled. These are really first order issues for the agency. They're first order issues for the Treasury Department, for the administration overall, as they think about the importance of investing in tax administration. But I think there's a really core question, and kind of Stephen started to get at it, of like, what should the future, let's sort of hope and wish that these investments all come through and that we see a lot of significant resource infusion for the agency. What does it mean to improve tax administration through the lens of equity and through the lens of fairness? And maybe I can kind of start with Erin and ask us to work our way around and kind of just speak a little bit to what your vision for the IRS of the future would be and why these resources and how these resources could really substantially improve the ability of the agency to serve.
Yeah, I don't think any of us disagree that a well-resourced agency would change the entire landscape of tax administration. I believe that poor service causes multiple taxpayer frustration, but it also equates to distrust, and distrust in the federal government and distrust in the IRS. And, you know, as Lily and others have alluded to, you know, the IRS has struggled in the past decade. Its budget was decreased about 20%, its workforce decreased about 17%, but at the same time, their workload has increased. The number of tax returns has gone up. And then adding to their core mission of processing the returns, Congress has entrusted them to basically implement anti-poverty benefits, which has been tremendous for the individuals and the families, but it has stretched and strained the IRS resources even further to the point that, you know, something has to give, sort of as you were mentioning, Natasha, it's like it's impacting their core mission, and they have been doing amazing things, but at what cost? So we really need to kind of level the playing field. So the consequences of the last decade, the impact of COVID, I mean, we're all very familiar with the low level of service on the telephones, the backlog of the tens of millions of the returns that are still waiting to be issued. And many of those taxpayers, they've been waiting in excess of a year. And a lot of those payments directly impact low-income taxpayers who are still waiting for either their earned income tax credit or the other half of their child tax credit, or payments truing up the EITC. And that's just, we can understand why, but it's unacceptable. A lot of those individuals, I think Lee was making a comment, I mean, they work that into their budget. I mean, this is a lot of money for these families, and to be waiting for this period of time because of the stress and strain on the IRS system and the tax administration isn't just not good. So again, if in a perfect world, taxpayers, they need to have choices and they need to have access. And that needs to be across the board, whether that be phones, whether that be in person, whether that be digital. And the IRS needs to continue focusing and growing its presence in those underserved communities. And, you know, this should go without saying, but we need to make tax administration and the tax code simple and easy to understand so people can implement it fairly. So I have a long list and we could go on and on forever, but I will turn it over to others. But IRS has a lot of needs, everything from just basic service that they need to do with taxpayers to plain English explanations, dealing with taxpayers the first time they deal with the IRS and having that experience be positive throughout, you know, sort of their involvement. And most importantly, the technology challenges they're facing. I mean, that is major. We need to bring the IRS into the 20th century in order to be a proper tax administration.
I think to pick up on what Erin was saying there, I mean, Erin, I think couldn't agree more with all of that. I think sometimes it's helpful to like think about these broad priorities in the context of specific examples, and I think the CTC provides a good example to kind of look at and like what were the pain points. One pain point I think is one that that Lee and the SaverLife team actually I think were very helpful in diagnosing, which is, again, we were making 37 million payments to families more than 6 million kids, but the information that was feeding into those payments was complicated. It was based on a 2020 return, it was based on a 2019 return, there was a non-filer portal, there were updates that were going into a new portal that the IRS set up to administer the program. And one thing that we saw was that there were families who thought they should be getting payments that weren't. When you think about it, that's like an incredibly frustrating and upsetting experience. If you're a family of 3 kids and you think you should be getting $900 a month for those kids, and for some reason you aren't, and I think if you're in that situation, you have a right to expect that your government is going to be able to explain why you're not getting those payments and what the issues are. And the IRS, again, to their credit, they built an update portal, which was designed to give people information about their benefits. But that portal was connected to what's called the master file. It was connected to the legacy IT system that was the engine for the whole program. And in some sense, that creates a constraint on the whole enterprise. So as we think about the future of the IRS as a more dynamic and flexible and transparent organization, something as essential as that is just giving people information about the benefits that they believe they're owed. is an example of how I think we have a tremendous opportunity for such substantial improvement, but one that really is going to require a resource infusion to get it done. Because what's happened over time is you have year-to-year budgets, you don't have enough money. It is just hard to plan and make these long-term investments to make it happen. And that has been a lesson that has been learned over the course of decades now, in terms of the experience of the IRS. But again, with this multi-year money, we have a real opportunity to begin to tell a different story.
If I can jump in on that, thanks, Mike, for raising up some of the data that we have at SaverLife, and that's one area where we think we can be useful because we do connect to 500,000 people, the vast majority of whom are eligible for the tax credits that we're talking about today on the call. So what we had found in our research last fall was over about a third of people had not received the child tax credit payments that they were expecting. And as you've been so candid in raising, we don't know why that was, because they don't know why that was. 97% of our membership had filed their taxes and had also gone to the portal, had updated their address, and done everything that they could. So I also want to make a point here that this isn't necessarily a knowledge gap, right, on the part of tax filers. This isn't people didn't know about the CTC or people didn't know about the EITC. These are real challenges that people are having in claiming these benefits that are so essential. And Shira's just put in the chat a report that we wrote that measured the impact. We see these payments hit people's bank accounts, and we're able to see how those funds get used to really shore up family finances. So a lot of the time people are getting these kind of frustrating pending messages, and they didn't really understand what they meant. We did unearth some information, again, is to really think about people's lives, which, some people have quite complex family situations. So we did see challenges with families who maybe parents were separated and multiple people who were claiming dependents, with some confusion there. So we've been able to pinpoint some of that. But really, I think anything that we can do to just get more information into the hands of families so they can take action proactively would be one thing. Looking at tax preparers and their role in this. I don't know, what data do we have on if we're seeing challenges and people getting things filed or processed? Are there any trends or patterns we could identify there that may be able to shed some light on what's happening? But I will say, you guys, the IRS did a phenomenal job getting this money out to people, and because of that effort, people were able to feed their kids and stay in their homes. And I don't want to let that go without saying how much credit is deserved there, and just how much I appreciate the candor of this conversation. But yes, there's plenty more to discuss in what could be done.
And
I'll just
follow up.
Oh, go ahead.
Go ahead, Stephen.
I'll just add quickly.
To follow up on Lee's comment. Here we talk over each other. Watching the sausage being made from inside the IRS sometimes is a little painful. And I think one of the challenges the IRS had, Lee, that you were pointing to, is their technology. Again, kudos to them. They got a tremendous amount of payments out the door, and they helped. It was instrumental to a lot of families. But those who did not receive it, again, I think a lot of that was technology based. They just don't have the infrastructure. They have too many standalone legacy systems. They don't talk to each other, and it makes it very difficult. So again, back to Natasha's, sort of original question, how do I envision sort of the well-resourced agency? We've got to get their IT up to date so that individuals can receive the benefits that Congress intends. So anyway, Stephen, sorry, I cut you off.
Not at all. I'm grateful to hear what you have to say, Erin. I'll just say that, I'm not sure what the IRS of the future looks like, but it's really exciting to contemplate that, a well-resourced IRS. But I do know that more than $0 should be spent on countering and addressing bias. I don't know what the right number is, but I'm pretty sure that 0 is not the right number. So that's a real problem going forward if we're going to build the trust and really do the good work that the IRS is attempting to do. Just one example of a problem that isn't technology or funding, for the economic impact payments, those were initially not sent out to incarcerated individuals. That wasn't the law. The law didn't say that, but the IRS just chose not to send those payments to those folks, even though they were certainly affected and their families certainly needed the help. So that's the kind of mistake that I think would be less likely to be made if more thought and effort and money were devoted to addressing questions of bias.
Maybe, I mean, Stephen, sort of, maybe it makes sense to pick up on a bit of a theme from you and Lee with respect to trust and trust in the agency, because I've spent a lot of my time over the course of the last year and a half sort of trying to make a case very concretely for the importance of investing in the IRS. And one big piece of that conversation is about the magnitude of the tax gap, right? It's like a $600 billion gulf between what's owed to the IRS and what's collected each year. That number is huge. That's 3% of GDP on an annualized basis. But also, sort of, if you look at the distribution of those lost tax revenue, it's overwhelmingly concentrated in the very tip top of the distribution. And when you look at what's happened to the IRS's enforcement activity in the last decade, as it's been gutted, what's happened is that audit rates of like people who make $10 million or more annually have dropped off by like 70, 80%. Audit rates of EITC recipients have dropped off by less than half of that. And now we have these statistics that I know you all are very familiar with, but top 10 counties in the country with the highest audit rates are low income, disproportionately minority communities. That creates a perception, that fact, just to be explicit, that fact is very substantially about resource constraints, because what has happened over the course of the last decade is the IRS has lost the workforce that's capable of spending thousands of hours on complicated taxpayers' returns, and a correspondence audit of an EITC recipient isn't the same kind of exercise from the agency's perspective, from a resource perspective. So it's incredibly important to rebuild the agency's capacity to do work at the top. It's incredibly important to rebuild the agency's capacity to serve the American people. But what I wonder is if you all think that those steps, that rebuilding, also sort of builds trust in the agency's ability to serve taxpayers in an equitable way, or if there's more. Lee spoke of a rebrand, there's like more that we should be doing and more that we should be speaking of when we think about the IRS and the IRS of the future on sort of these dimensions. And maybe we can go in reverse order this time. So maybe Stephen, if you are good with starting.
Always happy to start. Thank you, Natasha. When I think about this, I think about the view of the Congressional Black Caucus on the '94 crime bill, right? So crime is bad. Crime is especially bad for vulnerable populations because they're affected by it disproportionately. So the view of the Congressional Black Caucus on the '94 crime bill, now notorious for supercharging prisons, is complicated, right? So, and I think the same would be true for a lot of folks about spending more on the IRS, and also thinking about what low, sort of diminished budgets meant for, did it really make them audit poor Black counties in the South? Not really. You can see why that would be something they could do, but nobody made them do that, right? The diminished resources didn't make them over audit poor Black counties in the South. We can see how you would get there without any ill intent, but better judgment might have restrained that enforcement activity. So it's not just enforcement resources that made that happen, but you can see how with a failure to address bias, with a failure to be attentive to that, with no safeguards, no body cameras, right, for this, you would do that, right? So I like the fun fact for me is that in 1 year, Tim Scott, the Republican senator from Florida, was pulled over 7 times, right? How is that possible, right? So I doubt he was doing anything that terrible, but it's just something that we need to be aware of in this context. This tax enforcement is law enforcement, and all the concerns we would have elsewhere are relevant here. Low resources may make you go after the most vulnerable populations, but they don't force you to. They may make it easier to do that, but there are other mechanisms driving that.
I'm happy to jump in on this as well. I think that was really, points well taken there. You know, one of the other things that we found, and I'll admit we jumped to a bit of a conclusion at SaverLife, we had found most of the time our clients file their taxes really early. So they file in February, going to get that, that money in the door that's so urgently needed. This year, we actually saw something a little different. We saw about 40% of people filed later than they normally did. And at first we thought, oh, is that refunds being behind? Turns out no, it was people were filing late. And the reason that they gave was they were afraid that they were going to have to pay back money, right? That there's been so much with the advanced CTC payments, unemployment insurance, like all these other things that were very complicated over the last couple of years, created this kind of fear factor that people thought that maybe they were going to owe the IRS, right? So this fear of owing the IRS. Now, as it turned out, in the vast majority of cases, that wasn't the case, that people didn't owe money. And that meant that they were delayed in getting these funds, right, that they so desperately needed. So again, it's like, things are complicated, but the more that we can do to simplify that messaging and really tell people, upfront more about, what's happening in the process and what the rules are going to be, I think the more helpful that that will be for people. So this kind of fear of making mistakes is really, really present for people in a way that kind of diminishes the trust that people have in the system and in the IRS. And then, of course, when people don't get the payments and the things that they think they deserve, or that they do deserve, that also further reduces that trust. But I think to build on Professor Dean's points, we're also combating prevalent myths and stereotypes about the deservedness of working poor people in the United States. And there are so many stereotypes about what people spend their tax refunds on. And there was so much of that around the CTC, around the expanded unemployment insurance. I can tell you at SaverLife, we measure what people spend it on, and I'll tell you exactly what they spend it on. They spend it on food, they spend it on rent, they spend it on bills, they spend it on utilities, and they spend it on their children. And we have to be very loud about combating these myths and stereotypes, because that's the big thing that prevents us from winning, right? And so the more that we can say about that, and about how families use this money to shore up their families, to invest in their local economies, to pay for their kids. We know in our data around the CTC, people spent the money on immediate expenses because they knew it was temporary, right? That was one of our worries. Would people think that this was going to be permanent and make big life decisions? No, people knew it was temporary and they planned accordingly. But had those payments been permanent, the number one and two things they said they would invest in. Number one, support for their children's education, and number two, investing in their children's college funds. Those were the two things people said they would prioritize. So again, we've got to really get those messages out there that people know how to spend their money, and they spend it wisely and they spend it well.
Yeah, I think, Natasha, embedded in your question is this, and I think also in Stephen's response is this, the importance of the relationship between trust and the IRS, and how we think about the enforcement portfolio. And I think embedded in Lee's response, and one point I'd like to emphasize, is that is also something we have to think about with respect to the taxpayer experience side, because fundamentally, one's faith in an institution is going to be shaped by one's interactions with that institution. And I think about it not just about trusting the IRS, but really trusting the capacity of public institutions and the capacity of government, because on a kind of day-to-day, year-to-year basis, what are the government entities that people are actually interacting with, right? There aren't too many. I mean, there's the DMV, we all know that. On the local level, people are often taking public transit. People get a passport, but vast majority of people are always interacting with the IRS every year. And so the nature of that interaction is going to be fundamental to their perceptions of the federal government, the capacity of the federal government. And so when we talk about investing in the IRS, to me, we're not just talking about investing in those interactions. We are talking about investing in a fundamental component of our social infrastructure, of our society. And I think that is a view embedded in the question of trust that really kind of infuses a even broader sense of urgency to this set of efforts.
Yeah, and I just want to jump in and give a plug actually to, I see that we have a number of VITA volunteers in the chat box because, you know, they are huge. I mean, the tax code is complex, tax administration is complex, filling out a return is complex. You know, those who can afford to pay an advisor and have representatives that can work the code, they have an advantage over every other taxpayer, and we need to fix that. And I think, so thank you for all the folks that do VITA and TICE, low-income tax clinics. You play a huge role in helping, you know, those individuals in need, because it is not easy. I don't know about you guys, I still fill out my own return and I say a lot of bad words every April. It is very complex, and to ask people, you know, who are not comfortable in the tax arena to be, you know, have to be compliant and file these, I can see why people have real concerns. So again, I want to just thank some of the folks I see popping their names up here for all that you do for taxpayers.
I mean, one question that comes to mind sort of from all of your responses is changing the, you know, rebranding an agency, changing the nature of the IRS's or improving the IRS's interactions with taxpayers. Those aren't sort of overhauling the IRS's technological ecosystem. These are not changes that are going to happen overnight necessarily. Even if you fully resource the agency tomorrow, which I hope that we will, I don't think that these are going to be places where it's necessarily, you know, immediate shifts or cultural shifts. So what advice in some sense would you give to the IRS? What advice would you give to all of us as to how to think about ways in which I think we all share the same objective? I think there are real questions of how you think about what you're going to be able to accomplish from the perspective of taxpayers in the short run. And maybe this gives us a chance, actually, I think, especially for Lee and Mike, to sort of speak a little bit to the experience of the CTC in greater depth, because there, I think having some context for when the IRS tries to move fast and tries to do so much for taxpayers, there are real opportunities there. There also are real challenges, and trying to think towards what can be accomplished in a short term and then in a medium term and a long term is a set of objectives that we're trying to line up ourselves as we think about the future of the agency.
Mike, do you want to go first on that one?
I will just say very quickly, Natasha, I'm more interested in what the other panelists have to say. But I do think that you do highlight an important tension, which is balancing the impulse to deliver immediately with the impulse to rebuild the foundation. And I think fundamentally, it's going to have to be a kind of both and approach. But certainly from the CTC perspective, if one were to have a year or two to implement that program, one would have designed it very differently than we did, given 4 months to do so. And in fact, when you looked at some of the legislative proposals that ended up getting put out, they baked in delays in implementing reforms to the program because out of a recognition of the importance of that kind of planning exercise. So I do think that it's going to be an important tension for all of us to navigate if we're hopefully in the position of deciding how to put these resources to work.
I think that's right. And speaking as someone who worked in a local treasurer tax collector's office for many years, and still have printouts. I don't know if you're old enough to remember the green and white stripy paper with the little holes in the side. Yeah, we still have that, I think, in the treasurer's office. I don't know if they still do, but they did it when I worked there. And now I effectively run a software company, right? It's a nonprofit fintech, and some of these problems, we all wish that we could have gone back and built things better the first time, right? Like that's just kind of the nature of technology. But we've learned a lot, right? And I think we learned a lot about the importance of the IRS, the future of the IRS. I hate to say it, but the things that we've just lived through with the pandemic, we're going to see those types of things more frequently as climate change and other things take hold, right? These types of widespread issues affecting communities, and we need to be prepared for that. And I think that to resource our government agencies in the way that reflects the importance of the role that they play in society is really critical. Now, I can't claim to know enough about tech to even comment on how to fix the complex issues of the IRS and the technology side. But I think from a client perspective, the big frustration was just lack of information, right? Like not being able to get information and therefore not being able to know how to fix it. So is there a way to just have the Where's My Refund portal, which a lot of people use, to be able to just not say pending. Pending is, it's pretty vague, right? So anything else that could be said that could give people information that would then slow down the volume of people who are making phone calls because they're trying to get this information, I think would be really helpful. Again, looking at the role of tax preparers and how they can provide vital information and resources to people. Both, obviously free tax prep sites and Vita are hugely important, but the reality is that most people go to paid preparers, right? And that's where they do their taxes. So how can we engage those people, those folks as partners in this effort as well? But I think for our clients, the big frustration was just not knowing, I'm waiting for this money. I can't get a hold of anyone. I've called 30 times. I get hung up on, I don't know what to do. And I need this money, very urgently. So I think we can look back on what we've learned and what worked well, getting payments out to people really fast, the use of direct deposit, those things worked really, really well. Another one I'll raise is, for people who've gotten loans against their refunds in the past, I think that caused some problems, right? Whose bank information is it that's actually on file with the IRS? Is it yours? Or is it, somebody else's that used that information when you took out a rapid loan against your refund? So again, there's these kind of ecosystem things that we have to look at. There are more players in the mix here than just the filer and the IRS.
Maybe, Stephen, sort of in a similar vein, but slightly distinct vein, if you sort of could wave a magic wand in terms of short-term things that you would want to see the agency do through the lens of being more equitable or thinking more deeply about equity before they act, like what would those be in your mind?
Sure, and I don't think it takes a magic wand. I think one of the first things I would do is reach out to the Congressional Black Caucus and just ask them, what would they like to see the IRS doing? I wrote an article a few years ago about what the Congressional Black Caucus did on international tax evasion, and you might be surprised to learn that they really helped move things towards FATCA in a really helpful direction and away from this sort of creepy, weird Black countries of the problem approach that had been taken before that. And I really do think there's a lot of wisdom in the Congressional Black Caucus, and just reaching out to them and asking them what they think would be helpful and getting through to different kinds of communities would be just really valuable.
And Erin, maybe the same question to you to sort of wave a magic wand. What should the IRS be doing differently today?
I need a really big wand. Everything from the basics, answer the phone, put things in English. It's just that daily core service. Again, if I had a big wand, I'd redo their entire IT system so that they could provide, as Lee was talking about, if people could self-help, that's going to free up the phones for those people who actually need it. There are a lot of people who would be happy, where's my refund? I think last year was something like 682 million hits because they didn't have the answer. People just kept going back and it said pending, pending, pending. So it's just the simple little things, as well as, the interaction. We were talking about this today at a meeting. If someone has a baby, IRS is aware of that. Well, maybe they should be giving advice out saying, now that you've had this life change, you need to do the following, or you should consider the following. We should be proactive, not just being reactive when people do things. So I think there's a lot of opportunities of where the IRS can grow in the future.
Maybe with that, I know there's a bunch of questions that have come in from the audience, so maybe I'll hand it over to Joanna to kind of speak to some of those and get our panelist perspective.
Terrific. Thank you so much, Natasha. So thank you all for sending in all of the questions. They're really terrific. And unfortunately, we're not going to get to all of them in 15 minutes. But to get us started, there was a number of questions around simplified filing, around automatic tax filing. Is this a possibility? How can this be developed? How can we go to meet perhaps estimated tax filing like in Europe? So if any of our panelists can respond to that, that would be terrific.
So I'm
All right,
I'm
no
happy.
one's go ahead,
Sorry,
Mike.
go ahead. Yeah, I'm happy to jump in here. I think it's such an important conversation to talk about the actual mechanics of how people file taxes in this country. And I think, as the questioner points out, there's no question that most other countries with the types of resources that we have here have figured out easier ways to make this happen. Now, I think a lot of them probably have tax codes that aren't quite as complicated as ours. You can look at a whole bunch of reasons, right? But I think it's a really important conversation. I think it's one that frankly becomes energized in a new and quite meaningful way when you start talking about resourcing the IRS to a level and with a kind of, that kind of stable, longer term funding that allows for creative thinking around these types of issues.
Yeah, I think the IRS needs to continue focusing on improving the use of free file, because those numbers have really tanked as to how many people, in fact, I think I forget the actual number, but it's in the single digits, 4% or something of the people who could qualify actually use it. Whether or not IRS could, in fact, create some sort of structure for folks, whether they could build up their online account so you could go in and just download the information. This is what, I work for XYZ company. They say I made $5,000, $10,000 last year, so that you know what the IRS records have and you'll file, more accurately, or know that there's a disagreement with the IRS before you file it. There's a lot of things that I think we can do to help taxpayers in the filing arena to try and simplify this. We depend on voluntary compliance. I mean, that is what our system is. So as an agency, the IRS needs to make it as accessible and easy as possible. And in I'm sorry to read, that people are afraid. So in a non-threatening way, that they're going to see severe consequences, negative consequences. I have taxpayers call our office all the time with concerns. And, we as a society need to change that.
I'll just say, Joanna, I think I will chime in and say, I think it's important to think about all of these. I know I've a broken record, but in the context of like resources as well, because when you think about how people these days are sort of interacting with their financial institution, they're able to do so much on their phones. They can deposit checks, they can check on transactions that look sort of suspect, all through this device. At the IRS, and that's one fact, JP Morgan spent $12 billion last year on improving its IT, building off of a foundation that lets you do this. At the IRS, I was in Austin last week at one of the IRS submission processing centers, sort of watching paper returns be processed, where I saw people, very sort of hundreds of IRS employees, literally transcribing by hand line items from a paper return. We are so far from a technological perspective relative to where the agency should be and where the rest of businesses in this country are, frankly, that it is incredibly important to think about ways to simplify the filing experience. It's really important to understand that the way things are today are derivative of resource needs that are so significant.
Great, thank you all. There were a number of questions around collecting race, collecting ethnicity. Part of that was, is there current standalone legislation to mandate that the IRS begin to collect and analyze race and ethnicity data? And the other question was, what would the most optimal method be to gather this data? Would that be through tax forms, surveys, interagency data sharing? So would love it if someone could speak to that.
I'll give a start to that, but others can probably weigh in. I'll say that as Secretary Batchelder mentioned, there is an effort, spurred in part by Biden's executive order on anti-racism, to do this in a very profound and thorough and far-reaching way to figure out how to understand the impact of race on the tax law. I think that's great. I see that as a really profound good that is underway. I think beyond that, it's complicated, right? So I am not certain in an environment in which trust is not that high that people are going to be thrilled with the idea of indicating their race on tax returns. I mean, listen, it doesn't take a genius for people to figure out that if you live in a predominantly Black neighborhood, you might very well be Black. So it's not as though this information is totally obscure and secret right now. But I would say that it's not obvious that collecting information on race from taxpayers is necessary, because Jim Alm is working a great new paper that uses all the super cool techniques that Natasha understands very well. We don't need it, right? We don't need this information from taxpayers in order to figure out what's happening. There are other things we like to do, and as I say, I don't know what body cameras look like in this context, but there certainly is something that would be not supercomputer size that would help address and monitor bias in this context. So I would say that there are really high-level things that are happening. I'm not sure that collecting race data from taxpayers is necessary or desirable. I'm not sure that it's not, but I'm not sure that it is. But there are also, I think of the way in housing discrimination that you send in testers. I don't know if you could find some way of doing that. That's not super complicated, right? When you send in a Black family and a white family and ask if their apartment's available, and one family is told yes, one family is told no, you've got a problem. There are probably things like that that could be done that'd be very helpful.
And I think to Stephen's point, there's a lot of very important questions that can be answered through some of the methodologies that Lily and her team are exploring today, like being able to impute race in the tax data so that you can document and study and quantify the distribution along racial dimensions of credits, of the economic impact payments, of enforcement activities, frankly, in ways that we're just not able to today in the existing data ecosystem. And that quantification effort is, I wonder if Stephen agrees with this. I feel like that quantification effort is likely sort of a precursor to building that trust that you're speaking of, because in order to be able to address a problem, you really need to be able to quantify and understand it, and also then understand how policy levers that you pull are helping to address it. And in the absence of sort of any way of being able to do measurement that's more precise than just sort of thinking or speculating that there are problems that exist, I think we're at a bit of a standstill with respect to both being able to see the magnitude of what we're trying to address and being able then to take concrete actions to try to ameliorate some of these problems.
I think that's right. I completely agree with both Stephen and Natasha on this. And I know Joanna's put a comment in the chat around other places in the financial system where we may begin tracking rates. And one of those other areas is in small business lending. For example, there's regulation making its way right now that would require financial institutions to report race and gender-based data on small business lending, because we know that there's a problem. I'm pretty sure it's not going to look good once we get the data. But we need to know, right, the answers if we're going to solve these problems. And we need to be able to measure change going forward. And so I think that having that baseline information will be very important.
Couple more questions. I know we're almost at the end. When we're talking about funding the IRS, we're talking about strengthening the IRS and funding the IRS at around $80 billion over the next 10 years. Can you talk to the audience, right? We have a lot of folks who do taxes, volunteer to do taxes. They're very invested in the taxpayer experience, in their clients. What will change with this additional funding? What will change, what could change in terms of the taxpayer experience with this additional funding?
Well, I think the first thing will be hiring more people to answer phones. So I think that'll be hopefully a quick win. To me, I think fundamentally, it returns to a theme that we've been talking about during this conversation, which is creating a technology infrastructure that is able to interface with American taxpayers in modern ways. And approaching tax administration from the perspective that one should be able to interact with the IRS and access one's tax information from in the same type of ways that one can interact with a banking institution or a tech institution. And that's going to take a tremendous amount of work, but it's something that's very, very possible. It really is. And I think that it's something that unleashes if we can get there, it really unleashes a lot of opportunity and possibility in terms of what the IRS is capable to do to serve taxpayers.
Yeah, and I would break that into sort of two buckets. Those who have the desire to self-help, and that those are all IT based. You know, really getting a robust online account, being able to have secure two-way messaging, having bot chats, you know, uploading documents, getting access to all your documents through an online account, that would be change tax administration. And there's a good percentage of our population of tax preparers and individuals who very much want that. But then we have the other group who are more interested in the FaceTime, you know, having IRS agents more available, having service, getting on the telephones, you know, and again, so I think IRS should not lose sight of, you know, we have different groups of taxpayers and we kind of always refer to this sort of the omni service. You know, it should be seamless whether or not you want it in person, on the phone, digital, electronic. So again, I think a large percentage of what the IRS needs to do is technology, which will help a large percentage of taxpayers. But then we need to just focus on core service, helping individuals, getting information out, working in the communities, education, partnering with our, you know, our stakeholders outside. United Way is you know, one of the ones that we do a lot, you know, the VITA, you know, it takes a village for us to, as a society, to kind of help everyone get to where they need to go. Part of it also is Congress. I'll point up at the Hill as well. You know, they need to work with the IRS and Treasury so that when they implement a law, it can be administered easily. And so, you know, that's one of the things that, you know, we need to start with the law and then how we administer it. But I think as an agency, IRS can't lose sight of, you know, we're there to provide service. Unfortunately, there's a joke that service is our last name. It should be our first name. What we do with taxpayers, service should come first. And that should be foremost, you know, in every employee's mind when they help taxpayers. We need to really, you know, have that experience be positive. It would be nice if the IRS was on the brunt of every joke, but as we talked about early on, we need to change sort of their branding, that people look to the IRS as a benefit, as a help. So, you know, again, I think there's a lot of great things the IRS does, but, you know, as an agency, it can go a lot further. So sorry to get on my soapbox, but as I said, I could go on forever about all the things we can do better.
And I mean, one thing just to sort of pick up a point from Julie in the chat, I think sort of the automation and the technology is so deeply important in investing in your capacity to communicate with the agency the way that you want to as a taxpayer. On the other hand, we know there are real issues of access for certain types of populations and for certain types of people. And I think it's also important to note that over the course of the last decade, sort of the live touches that taxpayers have been able to have at taxpayer assistance centers have been halved because the IRS just doesn't have the resources, the manpower to be able to put people in those sites. So I think it's important to kind of, we've been talking about internally, meet taxpayers where they are and offer them, to Erin's point, the ability to communicate with the agency, have questions answered in an efficient and effective manner, however they choose and however is most convenient, frankly, for them to communicate and when they want to communicate.
I'm going to ask one final question before we wrap up, and it's going to have to be quick. We talked about improving services and technology. We talked a little bit about branding. Any final thoughts on how the IRS can help citizens build trust with their agency?
I think we've been talking a lot about the IRS really, leaning into the role that it plays and being supported in that way. And building trust comes from, following through on the things you say you're going to do, providing that level of service. And I'll plus one on the idea that the more that we can allow self-service for those people that works for, then it frees up the customer service agents to be able to deal with people who may have more complex cases. I'll also add that, as now a benefits providing agency, that a family and worker benefits unit that really is committed to working to unearth some of the challenges that we're seeing and work with, stakeholders and families to come up with the solutions. And I think asking people, as Stephen's reminding us of, right, and the people impacting, asking them their opinions and thoughts is really important. But how we can really invest in maybe a new division at the IRS that can have a little bit of a different brand and approach these issues a little differently may be a good thing to consider.
So I'll just add that, I loved a couple years ago, I did a podcast. It was really fun to do, talking to a bunch of tax nerds about tax law. And the one I did with a professor at Duke, Sarah Green, I titled "Thank God for Tax Day." She's a sociologist and law professor, and she works a lot with individuals who are working poor and who benefit from the kinds of credits we're talking about. And I think it's important to remember that yes, there's a lot of fear and anxiety, but that was a quote from one of our clients. Thank God for Tax Day, because this is really a big deal for them. It's really an important part of their lives that lets them do things they wouldn't otherwise be able to do, and they really see that. So it's not that there is not a strong base to start from. There really is a lot of good that the IRS does, and people know they do a lot of good. So there really is a lot of cause for optimism. I'm excited to see what is possible.
Yeah, and I would also give a plug for transparency, because I think, even the IRS has had struggles with COVID. I think as an agency, had we got the information out and helped more people understand, I think that would have helped a little bit more of the trust level as to, what some of the challenges were. But, again, I think it's really their experiences they have all year long. That's what's going to develop the trust. So it just gets down to the basics.
Absolutely. So I think we need to move towards wrapping up. Thank you all. Natasha, any final words? We're going to go to a call to action, but any final words before we do that?
I just sort of want to thank this group for being here today, and thank these panelists for being willing to spend so much time with us this afternoon. As it won't surprise any of you to learn, to Lily's point, these are incredibly live issues right now that we're confronting, both as we're pushing for the IRS to get the kind of resource infusion that I think we all agree it needs, but also as we think to planning for the future of the agency and what that should look like and how to think about the future of the IRS with an equity valence in mind. This is something the IRS cares a lot about. It's something Treasury cares a lot about, and the administration more broadly as well. So I hope this is a long way of saying, I hope this is the start in some sense for the continuation with many of you of conversations that we can continue to have over the course of the coming months, because they're incredibly valuable to us.
Terrific. Thank you so much, Natasha. And before you all leave, we know we're at time. Would love to just draw your attention to our call to action. We all know that, as we've discussed many, many times today, that we need to ask our legislators to strengthen the IRS, and we have a really easy way to do this. You can sign up for Prosperity Now's Advocacy Center. Shira is going to put a link in the chat, which will let you just go straight to an action alert and email your legislators with a pre-populated email that talks about how they can strengthen the IRS. So please look for Shira's link. She's going to, oh, she already did. Sorry, she put it in the chat. And please take a second, and we will also send that link out along with the video resources within the next week. Just wanted to thank all of our panelists. You all were amazing. Thank you to the Assistant Secretary. Thank you, Natasha, Mike, Aaron, Stephen, Lee, and thank you to our partners, National Women's Law Center, SaverLife, and United Way. We appreciate your partnership. And thank you so much for my friends at Prosperity Now for helping with this. Thank you all. Please complete our survey that you'll receive and have a great rest of your day.